All right, good morning, ladies and gentlemen. Today is October 28th, 2020, and it's the Wednesday right before the election, and we're getting a little bit of a sell-off in the market, which is kind of interesting. So we'll take a look at that. I'm going to do kind of a quick show today because we only have one open swing trade, which is honestly, that's perfect. That's exactly where or how we want to be positioned when the market sells off like it has been here recently. And so, that's kind of the beauty of the system, is that using the dynamic trailing stops, it's going to basically, once the forward momentum lets up at the end of a cycle, then it's going to close the open trades. Plus, we're in earnings season too, so we'll jump into it. We had a stock that basically just got closed ahead of earnings, so we'll take a look at that. And I guess, with one open trade right now, we might as well go ahead and go over and take a look at some of the trades that recently got closed. Real quick, here's what I have drawn on my S&P chart. Here's the election. Election's Tuesday, so that's gonna be interesting. So basically, there's just a few trading days here. So there's today, and then obviously Thursday, Friday, and Monday, and then it's election day, and it's going to be interesting, that's for sure. So this uptrend line kind of makes sense. There's a few touch points here, and interestingly enough, let's see, as we speak, S&P's down a little bit more. We're at 33, excuse me, 33.15. For some reason, this particular chart's delayed here, so I still like using the free stock charts because they're super simple to mark up. I can jump around and all that type of stuff. So I have Thinkorswim running on my other machines, on my other screens, but this is more than adequate for what we're doing here. So anyway, this is, as of right now, to me, this is sort of the uptrend line to pay attention to watch, right? Because if that gets broken, well then, there's support down around these lows here. Let's see, there's some support. I just call it this whole area here. From back at these highs back over here in June to the lows here in September. That's pretty big support zone right there. So in the event, I like looking at I can't really call them quadrants, but like little zones in between, like the trend lines and the support areas and that type of thing. And of course, so the market's still sort of in this little triangle here. Recently, I drew this downtrend line, and it's interesting that we kind of, let's see, what day was that? That was last Friday. So kind of tested this support area. This was a pretty big area here. You can see it acted as resistance, and then it was kind of a support area, and so I left that line on the chart there. And I drew this downtrend line, so the market needed to sort of break out of here to get back to the highs. And I said last week that it looked kind of like a cup and handle, and that's that may or may not be negated here. So this handle is not supposed to break down like that, right? It should have formed like a little short handle here and then broke to the upside if what you were looking for was a big run to new highs. But of course, with everything going on, the craziness of the election, got to expect a little bit of volatility, which is picking up. So I believe as of this morning, the S&P was down about 6% from the all-time high, a little over 6%. And as we speak right now, it's down 2.3%. And so, what was a little dip is now starting to turn into what you would call a pullback. So it goes dip, pullback and then correction, right? Anything over 10% is a correction. So we'll see what happens with this trend line. It's kind of interesting because nowadays you see a lot of trend lines get respected, at least initially, right? And I guess that's just the way that everybody's got their algos programmed. So let's look at the Dow. Notice that the Dow is a lot closer to that September low there. So that's kind of interesting. It's a totally different chart. You know, we're in one of those periods where the Dow, the Nasdaq, and the S&P are like almost like three different markets, right? Look at the Dow. That seems like kind of a reasonable trend line right there. And draw one across the highs here. And so looks like there's a little bit of risk of a breakdown here. So we shall see. And of course, you know, there's tons of support down here around these areas. So anyway, as we speak, Dow's down 616, which you know, if you go back and look at where it is compared to the sell-off in the spring and the subsequent rally, a little precarious looking though, be honest with you. These were the targets on the Dow that from way back here, back on the recovery watch list, if you're wondering what those marks are. Real quick look at the Qs, and then we'll jump into the stocks. Yeah, you know, I had the Qs kind of marked up in a weird way here. So I left this original trend line on here that got broken, and then I had drawn some other stuff here, and so yeah, you know, the Qs. I should probably start from scratch. I like to do that every now and then, just delete all the lines off my chart and start from scratch. But you know, the Nasdaq 100 had this basically like this tremendous rally and then kind of a melt up here, and then you know, lower high. Now it's kind of selling back down. So yeah, it's gonna be interesting to see how things pan out. We're in the thick of earnings season, so. Speaking of which, well, real quick, I'll tell you what. Let's just go ahead and look at let's look at the open trade here. We have one open trade, this RVLV, which we got into on what triggered on 10/7, and interestingly enough, the trailing stop's kind of hanging back, right? As of last night's close, the gain was 14.3%. Now, of course, it's it's taken a little bit of a hit today, so as you probably saw in the chart there. So, um, but I mean, hey, that's to be expected, right? There's a lot of stocks that are selling off pretty significantly here, and you know, stock like this is extremely volatile too. So, but anyway, you know, I'm kind of surprised, but the stop is still way back here at 18. I did a double take last night because I kind of thought it would slide up here to maybe, you know, to maybe just under this low, but because there was considerable forward progress these few days here. So, but you know, the system is designed to, it uses the stock's own ATRs and ranges, volatility, to figure out where the stop should be at any one given time. And this has been, you know, over the past couple of months, this has been extremely volatile stock. Look at these 2-day ranges here. It's humongous 2-day ranges. And so, you know, basically the idea is that it wants to allow for a normal price correction without getting you stopped out. So now, of course, you know, in real life, if you were in this, and you know, I never did mark the target on this. I don't know why, but the price is still above the target. That's what's even more interesting about where we are right now. So this was the original target when the stock triggered in, and for whatever reason, I hadn't marked that on here. I mean, it blew way past the target, so target was only $19, but this is kind of a low price stock for the system, and so, but don't let that fool you because it's all about percentages, right? So this particular stock actually triggered in a little bit higher. Looks like it triggered in over here, and so you would have compensated for that by having a target, up here, which it basically blew right through. So no big deal. Anyway, it was a beautiful pattern. It still really is. Still really a nice sort of breakout pattern out of this little wedge, but it went pretty far. It had this big sort of long range bar here, and so now it's in pullback mode. And I'll be honest with you, I would with the idea of selling half of it at the target or the compensation target, I'd probably protect this thing, just under that low right there. What is that low? 1910. Yeah, it's at 1937 right now. I'd think about protecting this, right? Now, of course, we get because usually a sell-off like we're seeing right now ends up with sort of one of those washout days where it spikes down and then recovers, and then maybe we'll get another shot at this. But so anyway, that's it. That's the only open swing trade that we have right now, which is pretty amazing. And quite frankly, that's exactly how we want to be positioned in this sort of in a sell-off. Right? So you remember like a few weeks ago. So let me go to the closed trades, and as you guys recall, a couple of weeks ago, I mean, we had a dozen open trades, right? And so that's just a function of the price cycle, right? So go back to the S&P here. And so here's the thing is like the market took a dip, and this little up cycle that we had here triggered in a whole bunch of stocks, and the market was, rallying, going up all the time. Stocks were hot, and the system took advantage of that by, a whole bunch of open trades. You can see the dates on these, 928. Actually, this DR Horton this was the oldest. This DHI here, as I recall, that was out of this last batch of swing trades. That was the one that was open first, right? And then you can see the entry dates on the other ones and the days they got open, and so yeah. So there was this whole big batch of open trades here, and interestingly enough, if you look over here in the min column, right? That's the min column basically shows you the minimum percent gain between the trigger price and when it hit the T stop, the trailing stop, right? So if all you did was enter at the trigger price and follow along with the trailing stop, that's the minimum gain. And so basically what's that showing you is that every single one of these got closed above the trigger price, right? And some of them pretty significantly, right? So anyway, I wanted to look at, we'll just go down this list here and take a look at these real quick, see what they look like now. This one in particular, ROL, got closed. This got closed at yesterday's open, right? And so that's how we handle earnings releases. I messed that up. So basically, like this particular stock, I believe they released earnings this morning before the bell, and so we closed it the previous day. If this stock was releasing earnings after the bell yesterday, we'd have done it the same way. So basically, we use the open price, and that's because it's easy. It's a good reference point, right? Anybody can sell a stock, right when the market opens, and obviously not, 2 seconds after they ring the bell, but you wait for the market to open, and then somewhere in the neighborhood of the open, you can easily get out on any one particular day. But well, you can see what how the stock reacted to earnings, and this is exactly why. Look at how well behaved the price action was, and then all of a sudden today, we have this crazy range in the price. It went down, it went up, it just doesn't know what to do because it's all the positioning after the earnings come out. And so you see some crazy moves after earnings come out, and that does not give you any sort of edge. And so that's why it makes sense to, we've discussed at length on different shows and in different videos why it makes sense to close a stock ahead of earnings. Some people like to trade stocks after earnings because they're extremely volatile, right? And quick trades or, that type of thing. But for what we're doing here with the swing trading, it doesn't make a sense. It doesn't make any sense to just roll the dice and hope the stock, has a big pop higher, because a lot of stocks don't do that. They gap down 30%. So anyway, long story short, even if we didn't close this ahead of earnings, you can see today it would have tagged this stop. Actually, I think the original one of the original stop was right about here, $58. So you can see it triggered in back over here. This little channel breakout had a really nice run up, and then just kind of stalled out, and then everything was looking kind of good. And this is an example of a stock that gapped down on the earnings release instead of popping up here to new highs. And so that's that. So we closed that ahead of earnings. So Walmart, so the rest of these stocks, I'm just going to go down. I'm going to jam real quick through like the list of trades that just got closed here, just so we can kind of see the progression of them. And you see Walmart just kind of barely made it to the target, and then markets started getting a little sketchy and tagged the stop there on Monday at 142. So not a big deal. You guys remember when this thing was triggering in, I wasn't extremely excited about it just because it's Walmart. Nothing wrong with that, but it's just a big, thick, investing type stock. And so for swing trading, you got to keep your expectations in line with the particular stock you're dealing with. So moving down the list, VNet, a lot of these you're going to see really made a significant move. From the trigger price to this high was 21.9%. So blew right through the target. Had a lot of volatility here, which was kind of interesting because it didn't get knocked out over this volatility. And basically it made a tremendous move. And then these type of stocks, these high beta stocks, when the market goes into correction mode, well, they correct significantly. And so fortunately, that trailing stop was way up here. So so the idea here is in real life, and of course, all this is programmed and presented on the data tables and that, and so you have a little bit of discretion with your actual trading. And so, conceptually in real life, you got in here at the trigger price, right around the trigger price. It hit the target. If you missed, if you missed selling that time, there was other opportunities. So it hit the target. The idea is, sell half at the target and then follow the trailing stop with the other half. So anyway you slice it, I mean, this was a decent trade, right? And obviously you always have the prerogative of, protecting it under a previous day's low. If you get a big spike up like that, this particular day right here, it might have made sense to say, hey, well, I'm just going to protect the other half of the position at the target. But regardless, what you see on the closed trades table is this minimum percent gain, and that's based on, entering at the trigger and getting stopped out at the T-stop. So just keep it simple. Keep everything simple. Moving down the list, we have PayPal. Very similar type of thing. Good entry over here. Trailed the stop up, blew through the target, hit a new high, right? It kind of broke out one day and then right into correction mode and hit the T stop here on Monday. 4% between here and here, but that doesn't tell the real story because it blew right through the target. So could have sold half at the target. So could have sold all of it at the target. But the thing of it is that some of these stocks go so far beyond the target at certain times that what you want to see, what we want to see, like a really good example. I don't know if any of them in this list. I guess we'll find out in a second. I can keep going here. This is the next one, Yeti. But ideally, what you want to see, like if a trade really works out, what you'll see is you'll see the T stop move above the target. Then you know that you caught a fish, right? So I believe Yeti got closed ahead of earnings too, if I'm not mistaken. Or maybe there was well, let's see, Yeti. Yeah, it says T stop 48.50. So it never actually hit this stop. So yeah, this is another one that got closed ahead of earnings. Let's see, there's got to be an example on here. Yeah, here's a good example. This is what I was looking for. So the trigger was back here. You can see there's the target. There's the compensation target for this little gap up. Blew past all that, went up here, and then that trailing stop got moved all the way up here. And so you figure percentage wise, $39 to 42. So the trailing stop was well above the target, and this of course was earnings. This would have been the date that we would have closed it. Actually, it probably would have been closed. Well, I don't know whether it used to be most companies released after the bell. Nowadays, it's about at least a third of companies are releasing earnings before the bell. And so, regardless, it would have gotten closed one of these 2 days here at the open. And this looks like the earnings reaction, right? Look at that crazy earnings reaction. But this is when they work out well. This is what you want to see. You want to see that trailing stop above the target. and so there you have it. Another good swing trade. Everything worked out. And basically, with this one, trailing stop got hit before, well, so I won't say before, but sort of as the market was beginning to sell off. And so we were out. Zscaler, this is another good example. Basically with this one, the is a trailing stop ended up like, right, well, a little bit above it. The target was 148. The trailing stop made it up to 148.80. And so, yeah, here's the thing is sometimes you get a really good entry on a swing trade and it moves in your favor and moves in your favor and you just think it's going to continue forever, right? And if what you do is just kind of forget about it and sit on it, every now and then you may latch onto one that never looks back. But more times than not, you get a move like this and you get too comfortable, and then at some point you turn around and you gave it all back, right? I mean, this stock's what, a couple of sell-off days away from giving it all back. Whereas the way the system is designed to trail that stop up, it stays with it, trails the stop up as long as the momentum continues. It tries to allow enough wiggle room for a normal, little dip or whatever. But if the trend reverses, right, like the trend, kind of looks like it's reversing here, lower highs, lower lows, it gets you out, right? And so, perfect example. And this, this Zscaler was one of these high momentum stock. And so, this is perfect. It doesn't get much better than that. Hit the target, got stopped out, half of the position above the target, and it doesn't get much better than that. Etsy, as I recall, something similar here. Etsy had this really persistent, sort of straight up breakout out of this. I don't remember what I even drew here. I got so much stuff drawn on here, but let me get that off of there. Yeah, so there you go. Etsy triggered in, right in this area when it broke out of this channel. And then for, practically a month, just sort of ran up at a 45-degree angle, which we know is unsustainable. Parabolic stop kicked in way up here, right, which would have gotten hit this day. But basically, you can see how the trailing stop ratcheted up, and ended up basically protecting the majority of the gains. And so this got taken out. Well, this was last Wednesday. So a lot of times, I mean, this was a super high momentum stock, and a lot of times those have, kind of 1-day sell-offs. And so it just, they get whacked all of a sudden as soon as there's some weakness in the overall market. But anyway, so that one turned into, a very significant winner. Just basically, the generic trigger to the trailing stop on Etsy was 24.7%, right? So, and you can see where that target is. That's one of the reasons that you only want to take partial profits at the target, because this is a perfect example of a stock that went well beyond the target. So, all right, moving along real quick. DocuSign, same sort of thing. DocuSign made it to the target, trailing stop ratcheted up, so turned into a pretty decent little swing trade there, percentage wise. 8.6% minimum. The max price, or the max in the data table over here, you can't really see it on the screen because of the way the screen is, but we go ahead and put the max price in there, just sort of as a point, a data point, just to so we can see, how well or how far the stock traveled past the trigger price. And so on that, on Docu, it was like 18%, right, up to this high right here. Microsoft, not typically a great swing trading stock. It's more of an investing stock, but it does have its cycles, right? This is a good example of what I was talking about a few minutes ago, as far as like giving it all back, right? So if you want to swing trade Microsoft, right, traded to that cup, got in like as it was starting to cup up. And typically, they'll cup up about 3/4 of the way, and then you can see that trailing stop came all the way, it hit the target, trailing stop came all the way up, and as we speak, now it's below the trigger. And so buy and hold would actually, this is what you call letting a winning position, a winning trade, turn into a loser if you were just buying and holding this thing. So that's not the purpose of what we're doing. Obviously, you could buy Microsoft and forget about it for the next 20 years and probably do great. But for the purpose of what we're doing, real quick swing trade, few percent there, which is about what you'd expect. That's about what you'd expect from Microsoft, but here's the other thing: is typically if you're swing trading Microsoft, then you're not taking a whole lot of risk either. So like some of these other stocks were kind of much higher risk stocks, because Microsoft, you don't have to sweat the small stuff and watch even watch it intraday. All right, just a few more here. And then that's basically it. So, I mean, I'm just going over all the trades that closed because I mean, hey, there's probably right now, there's a lot of people that bought some stocks recently that are second guessing. Everyone's kind of freaking out because the market's kind of, there's been so many periods of time where the market just kind of goes up all the time. And so, you get into these sell-offs or whatever, and and there's a lot of pain. Um, Here's a good example of, well, I don't know, it's a good example of, best example of why, trailing a stop up as a stock moves to lock in profits is the ticket. That's what this is an example of. So anyway, triggered in way back over here. Um, Probably that day right there. Trigger. Well, this was the first close over the trigger. So yeah. Excuse me. Triggered in. Big giant pop. Held it pretty well. You just ripped through the target that day, but you can see this one, a parabolic stop kicked in after that big move, and then there was another parabolic stop like way up here, kind of hard to see, but right under these lows, and then the trailing stop made it all the way up here too, right? And so that was a big move any way you slice it. Green Dot Corporation. So from here to there was 18.8%. So, and here you go. Look at it now. As we speak, it's given back, at least half of that, maybe a little bit more. So it's giving it back. So if you people just buy stocks to hang on to, imagine how good you felt about the position, up here. But if you sit on your hands and aren't proactive, like a lot of people are, and so at least, with the way that our system's designed, you got a plan. You got a plan of managing the position using the trailing stop and of course the target. So, all right, last one here. Last one. DHI. DHI, I don't think I ever, what was the 76.60? Yeah, I never marked the final trailing stop on this. So it was up here, basically. This is where it got taken out. Was it 76.60? I'll just put that on the chart just so I have it as a reference point next time. And so there you go. You guys that have been around for a while remember all the original markups here. This was actually an example I was using of, this was a great example when this thing was on the pending page, like back over here. It was on the pending trades page, and I was mocking up the potential symmetry in this pattern back here, and what could potentially manifest going forward. And I just left that all on there. It didn't really trigger in the exact same way. It was a little cleaner back here, right? You had this sell down and then kind of like a V reversal and entered right on the way up. Well, over here it was sort of a V reversal, but you also had a pretty, a decent sort of throwback here and some weird price action. But, there was some symmetry to it. It was very similar. So another good example of, the home builders were really strong for a period of time there. And then look at this sell down. And so, this thing basically, this made a humongous move from where it triggered in over here to, this sort of spike high. But then, boy, when it reversed, this sell down is kind of similar to this one, right? The symmetry on this thing is still kind of holding up. You get this, big trend move in one direction, and then you get a fairly significant sell-off. Now, in this case here, as of this morning, it's practically given everything back. Now, it does look like there's some, potential for it. It's already had a sell down, and so there's a little bit of potential here. But anyway, you can see that you can see how the trailing stop worked in this, which was perfect. So anyway, you guys want to check out the I'm not going to do this right now because I want to make it kind of a short show, but so we have the one open trade. I just went through basically the last batch of about a dozen closed trades, right? That all ended up in the win column, which is exactly what you want to see right before. There we go. Let me see if I can get that on the screen a little bit better. Yeah, so I mean that's just basically exactly what you want to see is profits getting locked in. Obviously, locking in the profits when these things tag the trailing stop. So you would have raised a lot of cash. Now, I'm not saying anybody would have been holding all of these things, but anyway you sliced it, it's been a pretty good up cycle. The system did great for this last cycle, and now, in theory, mostly on the sidelines, and we got a little sell-off ahead of the election here. No huge surprise on that, but and so if we get a nice sort of, well, we're already in pullback territory. I was going to say correction, but to me, correction's like 10% or more. So we're in pullback territory, probably, probably 7% roughly off the highs. And so basically, as this pullback sort of sorts itself out, when the next up cycle starts, there's a whole bunch of pending stocks. I don't say a whole bunch, but there's a nice little bevy of pending stocks that are starting to set up. And so, there may be some new ones that come on the list. There may be some on that list that drop off depending on what the price does, but everything's setting up for, another potential upcycle. And so, if the market basically, I think it's going to play out like this. If the market, continues to drop and then tanks, after the election or whatever, um, then we're going to be really glad, that we got one open position. If the market all of a sudden rallies after the election, then we got some really nice setups that will trigger in, and we'll take advantage of that. So everything is going exactly according to plan as far as what the system has done and where we stand right now. So those of you that are participating and got out of these swing trades somewhere in the neighborhood of the targets or the trailing stop, feeling pretty good about sort of sitting on the sidelines during this sell-off while you know everybody on CNBC is freaking out, right? So anyway, all right. Well, hey, thanks for joining me, and I will be here next week, same time, same place, and it's going to be the morning after the election, so it should be interesting. So tune in, and I will see you here next week.